Hello, everyone. Thank you for joining us on our second podcast, where we will go through about 15 of the top questions that came in over the last week from new shareholders. And then what we'll do in a couple of weeks is a third podcast where we really dig into the weeds, if you will, on each of the networks, the 7 networks that are part of our incubator, so that you have a better idea of who's involved in those networks, what their business model is, what their potential value proposition is to those business verticals, and then how that, of course, equals additional value to Social Life Network. So I, again, am Ken Tapp, the CEO of Social Life Network, and with me I have Todd Markey, who is one of our directors. And Todd, of course, is just as involved in each of these companies as I am. And so you will almost always see the two of us on the podcast from time to time. We will have other folks from our different groups with the different networks, I should say, on the podcast as well. I know that was a request from a few people this last week, but we're in the holidays and it's difficult to kind of rearrange everyone's schedule. So you get to see the two of us on this next podcast here. So on that note, Todd, I'm going to let you take it away, and you have the questions and hopefully I have the answers.
Well, it's good to see you today, Ken, and thank you everyone for jumping in and participating. Wishing everyone a happy holidays and looking forward to 2021. I'm going to wish everyone a happy new year as well. I know we're not going to get to see you until that time, but as Ken said, we are looking forward to having some great guests, continuing to stay in communication with our potential investors and current investors, and to make sure there are messages out there for everyone to read and to just stay in communication with us. So let's go ahead and get started. Ken, let's first start by talking a little bit about Social Life Network, how it is an incubator of these various social networks that we build out, what incubators are, how they're valued, and a little bit about why it's unique that Social Life Network is a publicly traded company.
Sure. For starters, we've received questions about, well, what's the difference between an incubator and an accelerator? And that's really an important question because there's a pretty fundamental difference. Incubators do not invest their own money into the companies that they are incubating, where an accelerator does. And typically an accelerator is only coming in with, a very small amount of money, certainly more defined as seed capital, where an incubator takes the human resources that it has. Hopefully you in an incubator have got some great people who understand how to go out and raise capital and set up the financial structure of companies, really laying out the stock structure for a long period of time so that you can get to a liquidity event and not short-sighted. Certainly bringing in industry experts for those companies, in our case a tech incubator, so those tech companies and the different verticals that they are in, and really to bring all that sort of management that can be expensive, very difficult to find, together so that the startup company has what it needs to really just go out and fine tune whatever tech solutions it's bringing to the different industries that they are going into. So on that note, we are really focused on becoming a public version because most incubators are not public. They're private companies. In fact, all of the big incubators are private companies. But our goal is to become more like a Y Combinator. They are a $100 billion company. Techstars, another big one, they're an $80 billion company. StartX, which is a little bit newer than the other two, they're a $26 billion company. And one of the newer, say, top 10 incubators that's out there out of Silicon Valley. And by the way, most of these are Silicon Valley, although they're worldwide too, but they're just home based there. That gives them the ability to do a better job sort of locally networking with other people that want to be part of those incubators. And 500 startups, they just a couple years ago were valued at about 10 billion and growing. So it gives you an idea of what a relatively new incubator can grow into in a pretty short period of time. And we feel like we are right at the verge, especially with 3 of our companies, as you know, getting prepared to go public, that our valuation that we have, of course, internally, different than our market cap on the public side, is growing at the rate that we were expecting, and it is, and we're excited about that.
Appreciate that explanation. I know that helps clarify a lot of the questions that we've had coming in from our investors and potential investors. Social Life Network as an incubator, having 15% of these licensees, what does that exactly mean for 2021 in the future going forward as our valuation and as our market cap continues to grow?
Well, before we even try to explain the value or how we arrive at the value internally, you have to really understand how each one of the companies that's being incubated gets valued. And in tech startups, there's a few different ways that right off of the bat, you're going to start to value each of the technology companies based on what their potential usership can be and just what type of opportunity, revenue-wise and usership-wise, be it local, national, or international, for that particular vertical. And then you add to that formula really your seed capital, and as you start to raise different rounds of capital, then you're raising that capital at a valuation, and now you're really well set. So of course we've got 3 companies right now that are at that stage where they're heading off to go public, and we've got a 15% stake, in each of those. We will have a 15% stake in each of the companies as they reach a liquidity event. Some won't go public. Some will just go and be sold through a merger acquisition. And don't forget, there's always the opportunity, and maybe opportunity is not the right word, but there's a chance that as we add other networks, some of these different groups in the incubator might combine and become more valuable too, where they could go public. So there's a lot of different variations. The thing that matters most to shareholders, public shareholders, is that just know that we have a 15% stake in whatever reaches a liquidity event. That being said, as of right now, based on the capital that we have been raising on these other incubators over the last few years, or I should say these other networks in our incubator over the last few years, internally we're right at about $100 million valuation. And that's going to go up considerably as MJ Link gets public, and Like RE and HuntPost hopefully get public as well. So that's a great start for us. And don't forget that we also take a 5% cut of the revenue on each of these companies too.
And is that a pretty standard rate for an incubator to own 15% of these various social networks, 5% revenue cut? Industry standard, pretty generous. What's your thoughts?
5%, that's really tied to the licensing of our IP. So that's not normal, because most incubators do not have their own IP that they're licensing out to the different companies that are inside of their incubator. 15% is a lot higher than the average. The average in an incubator is about 5 to 10% stake in a company. So we've got that extra 5% in there, again, because right up front, we've got the IP. What we've really done is we've set our incubator up in a way that it's almost like add water and watch it grow. You've got the technology in place. You've already got all of the leadership in place. What we look for the licensees to bring to the table is the ability to go out and raise at least $1 million in capital, and to bring in at least 10 advisors, and sometimes those advisors can also be directors, in their company that are in that industry, that can open up doors to different partnerships in that industry, because we really, as a tech incubator, value these companies based on how sticky those platforms become. What's the longevity of that platform? And so if you can have advisors and directors that are in each of those companies that have all of the connections necessary, and I'll use real estate as an example, all of the connections necessary to partner up with the National Association of Realtors and home builders and title companies and everything else, so that partnerships in those verticals become real solid. And those partnerships bring in their own members, usually they're the own users of those associations. Then those networks can grow and become really sticky, and those industries can become quite dependent on those networks for sometimes decades to come.
Moving on, we talked, or a lot of people are asking about, now that we've officially canceled for now our reverse stock split, whether or not, considering that we think that the market cap's undervalued out there, we may be considering a stock buyback. Comments?
Well, we don't have a stock buyback on the radar. But at the same time, that's kind of the flexibility that you want to have in an incubator that's a public company, that you can, when it makes the most sense, to be able to go back out to the open market and buy back stock. And I should say that we don't have a stock buyback on the game plan for 2021. But also keep in mind that 2 weeks ago we had a different game plan than we do today, because now we have all of these new shareholders that we're excited about, and we want to make certain that we are, like I said in the last couple of videos, that we're taking input in from you folks, not just the couple hundred folks that are already involved in our company on the private side. And so we'll see what happens. What makes a lot of sense, by the way, and we've had this conversation, Todd, this week, when you have these, in this case, 3 companies that are on this path to go public in the next year, could be sooner for one of them, depends on how the marijuana industry sort of pans out with different things that are happening here in the United States. I know that we have a lot of shareholders overseas, and they don't get a chance to know or stay exactly on top of what's happening with the legalization or reform of marijuana laws here in the United States. But there's a good chance that MJ Link could go public sooner versus later in 2021. And in that case, you're looking at the opportunity for Social Life Network to take some of its funds that it makes off of that IPO and go back and do a share buyback. One of the obvious things here is that the public company's market cap is drastically lower than our own internal valuation of the company. And so, look, don't forget that incubators also can be acquired as a portfolio company, if you will. And so there's always this opportunity where Social Life Network, somebody else comes in and acquires Social Life Network. And in that case, a public share would go for that buyout would go for a lot more than what it's trading for right now, because the valuation is really being set internally more as a private company for us. So, we'll see. I don't want to say that we will or we won't, only that that's a tool that we could use, and we will just simply have to see how 2021 plays out with the companies that we're focused on with the Reg A's and the IPO right now.
Well, I think part of the message there too is that we've got a lot of options, as you're saying, and that's an exciting position to be in. And another thing about it is that our main focus for everyone listening, just so that you know, is building these companies and creating this value. And we know that that's not currently adding up with our market cap, but our interest and our focus at this time is not to get out there and spend a lot of time creating attention on this stock or to increase the value of it, even if the share price right now. We know that'll come in time with building out these verticals and building out successful exits, as Ken's done in the past, and as we continue to do with our current companies that we have. So,
and that question also gets me thinking, Todd, about some of the other questions that have come in this week, especially as it relates to how much debt is left to convert, and is dilution an actual problem with our company, since we're an incubator versus so many other companies that dilution can be an issue with. You came on board a few years ago, you're a director, but prior to that, you were with so many other companies that were public companies. And I wish that more people understood how the conversion process works. Could you just shine a little bit of a light on that process for our shareholders, for those people that don't know what is actually happening behind the scenes?
Yeah, I'd love to. And I think that most of our audience will find some of what we'll be able to share, what we're allowed to share at least, very interesting, and it's something that a lot of our audience and investors out there, frankly, probably don't know about. Um, First of all, we know that there has been some conversion in our stock and that it has caused some dilution. But as Ken touched on a little bit earlier in the conversation, it's not exactly something at this moment that we are especially concerned about. Now, first of all, I think it's important to point out that these guys can't just convert within an hour and start liquidating all their shares. There's a process involved to it. It's something that they've been doing because of the viral activity that's been created in our stock right around December 3rd time, due to no promotion or activity of our own, no press or IR that we were doing, just simply keeping our heads down and growing our businesses. And at that time, investors had found our stock and taken interest. It had started really going viral on message boards, and we brought in a number of different shareholders. During that process, we have faced some of these conversions, but part of the reason why we're not really upset about it is because we are differently structured as an incubator, as Ken had mentioned earlier. And we are currently valuating our company privately closer to that $100 million mark. And even if we get up to 10 billion shares converted at a penny per share, we reach $100 million valuation. So it's not something that we're concerned about. It's something that we know is going on. And quite frankly, we are in a good position right now. And Ken, if you've got anything that you want to add to that, go ahead. But I hope that mostly answered what you were looking for.
Thanks, Todd. No, actually, I think that you covered that question really well. I'll just add one little thing to it, and that is that we are as transparent as we possibly can be, and will continue to be for everything, not just the debt that's being converted. We had a couple of questions this last week from people: how much debt is left that still needs to be converted? If you looked at our 10Q from the November 17th date, you'll see that we only have a few $100,000 left. So it's really more about are we at zero? Are we at 100,000? Where are we? And as soon as we have that number that we can share with you, we will. Of course, when we share that type of information, that needs to be filed. And so look for a filing when that actually happens.
Ken, let's move on to something a little bit more exciting, and let's talk about some of the new tech that we have, and what people might be able to expect for 2021. If you can give them any insight on that.
Well, 2020 was a big year for us to push our tech forward. Most of that was related to the COVID-19, shutdown internationally, where people were having to move from their actual office to making a home office. We really embraced that by launching we actually have two platforms out there. One is in the real estate industry called Like Our Reconnect, and the other one is in the cannabis industry called MJ Connect. Those are similar to Zoom on a platform as a video conferencing platform, but they're both also quite customized for those individual industries. So in 2021, we'll continue to add to that new technology. And there's a lot of new technology that we were working on in 2018 and 2019. They came out in 2020 on the e-commerce side. And we've gone through two major upgrades on that just in the last 4 or 5 months. We'll continue to do that moving forward, especially as the licensees grow their partnerships in the different industries. And those partnerships oftentimes will come to them and say, it'd be really great if the tech could do this, or you could add on this connection with a different system. And so that's always fun for us because, that's sort of an old hat for me in the tech space, is being able to connect systems together. So we're in the process, and this is every December, of finishing up a lot of new technology and releasing that in the beginning of January. And so I'm going to keep that a little close to our chest right now, because I don't want to let the cat out of the bag and have nothing to talk about in our next podcast. But we've got some new things that are coming out that are really cool.
Well, I think that for our audience, it's going to be exciting, to start going deeper into these conversations and really just talk about some of the generally exciting things that are going on in the economy, in the tech space, in the development space. and to have some great guests that have some great insight or work for some really unique companies in all of these different sectors and verticals. So, look, happy New Year, happy holidays to everyone for jumping on and listening to us today and taking the time. And we're really excited to have you all continue to follow us through our journey starting the first of the year. Ken, I'm going to leave it on over to you to close it off and to put any following, put any closing remarks on it. But thanks to everyone once again, and thank you, Ken, for arranging this as well.
You bet, and I'll echo, your holiday wishes to everybody. Clearly, it's important to stay healthy and stay safe. We always wish that upon everyone, and just plan on tuning in a couple of weeks so that we can get a little bit further into the weeds, if you will, on each of the networks. Hope to have some guest appearances from each of those networks, the board directors, and sometimes it'll be a partnership that network has. But it's really exciting for us to be able to present all of this information to all of you, and we hope that you find it just as exciting to listen to and be part of. So on that note, once again, stay safe and happy holidays, and we'll see you in a couple of weeks.